Tax planning is the analysis of a financial situation or plan to ensure that all elements work together to allow you to pay the lowest taxes possible. A plan that minimizes how much you would pay in taxes is referred to as tax efficient. Tax planning should be an essential part of an individual investor's financial plan. Reduction of tax liability and maximizing the ability to contribute to retirement plans are crucial for success. Tax revenues are used for public services and the operation of the government, as well as for Social Security and Medicare. As the large baby boomer generation has aged, Social Security and Medicare have claimed increasingly high proportions of the total federal expenditure of tax revenue. Throughout U.S. history, tax policy has been a consistent source of political debate. A tax requires a percentage of the taxpayer's earnings or money to be taken and remitted to the government. Paying of taxes at rates levied by the government is compulsory, and tax evasion, the deliberate failure to pay one's full tax liabilities, is punishable by law. On the other hand, tax avoidance, actions taken to lessen your tax liability and maximize after-tax income, is perfectly legal. Most governments use an agency or department to collect taxes. In the United States, this function is performed federally by the Internal Revenue Service, IRS. Understanding tax planning. Tax planning covers several considerations. Considerations include timing of income, size and timing of purchases, and planning for other expenditures. Also, the selection of investments and types of retirement plans must complement the tax filing status and deductions to create the best possible outcome. Whether you are a parent, a student, a homeowner, or even all three, we took the tax code and made it understandable. To get you started, here's a trusty cheat sheet with the top 10 things you must know going into tax season. 1. Payment app reporting paused for 1 year. There has been much confusion over a new requirement that payment apps, including Venmo, Cash App, and PayPal, report individuals' income of $600 or more. The IRS announced in late December that it is delaying that requirement by 1 year, meaning those apps must only report income of at least $20,000 for this tax season. But still, those who make all or part of their income in the gig economy must report their earnings to the IRS. This will give the IRS and the apps another year to figure out the logistics of reporting monetary transactions, which may be business or personal, according to the Taxpayer Advocacy Service. For example, friends splitting a bill at a restaurant should not be counted as income. 2. Smaller refunds likely. You may get a significantly smaller refund in 2023. That's because some tax credits are being reduced to the 2019 levels, according to the IRS. Those who received $3,600 per dependent last year may get $2,000 per dependent this year. Taxpayers with no children who received $1,500 from the Earned Income Tax Credit may now get $500. And the Child and Dependent Care Credit will max out at $2,100, compared to $8,000 previously. 3. Tax credit available for some new green vehicles. If you purchased a new electric vehicle after August 16, 2022, when the Inflation Reduction Act of 2022 was enacted, a tax credit is available for qualifying vehicles for which final assembly occurred in North America, according to the IRS. If you purchased an electric vehicle prior to that date, check the IRS's website or with your tax preparer to determine eligibility. 4. Tax prep and chill? Not so fast. Filing your taxes as soon as possible may feel rewarding as you check it off your long to-do list, but it's more important to wait to make sure all your tax documents have arrived, says Justin Pritchard, a certified financial planner with Approach Financial Incorporated. For example, investments you own might report earnings from Form 1099 later than you expect. You can go ahead and start filling out returns or providing information to your tax preparer right away, Pritchard says, but it might be wise to wait until March to finalize and file your return. You might even consider filing an extension now. It's quick, easy, and free. I like to file extensions earlier in the year just in case I need more time to get everything together. 5. Prior year contributions. There's still time. If you didn't contribute as much as you wanted to your retirement and health savings accounts, you still have time, Pritchard says. Your HSA and IRA can accept contributions into April for the prior tax year. You might be able to score a deduction or put money into a Roth IRA for potential tax-free income later in life. Be sure to review your eligibility before you contribute. 6. How to know if you need to file. Not sure if you are required to file a return? The IRS has an online tool to answer that. You'll need to know your filing status, single, married, widowed, etc., the amount of federal income tax withheld, and basic information to help you determine your gross income. 7. The documents you'll need in 2023. Here's a list of what you will need to file your return, according to the Taxpayer Advocate Service. The Social Security numbers or individual tax identification numbers for yourself and anyone else listed on your tax return. The W-2s and 1099s for all income you have received, including investments. Documentation to support tax credits and deductions, dependent care, homeownership, healthcare, education, etc. The prior year's adjusted gross income. Bank account and routing number for direct deposit of a refund. 8. Should you itemize or take the standard deduction? The standard deduction has greatly increased over the years, so itemizing may no longer be necessary, according to the Taxpayer Advocate Service. Standard deductions may vary based on marital status, whether you are blind, and other factors. 9. Find the right tax preparer. Anyone can be a paid tax return preparer, according to the IRS, as long as they have an IRS Preparer Identification Code. But their level of education and expertise can vary greatly. Do some research before hiring anyone. Ask your friends and colleagues for recommendations and read online reviews. 10. File your own return for free. If you're up for a challenge and feel comfortable doing your own return, you can do so online. If your annual gross income is $73,000 or less, you may be eligible for free guided tax preparation, which does the math for you on an IRS partner site. If your income is greater than that, you can use the IRS's free fillable forms. This allows you to enter your information electronically onto a 1040 form, print it, and mail it.